Welcome back. And to incite the much-needed transformation and revitalization of the Nigerian economy, the debt market has a critical role to play. That's according to the chief economist for Africa at Standard Chartered Bank UK, Ms. Razia Khan. In an interview with Channel's television business producer Temple Ashaju, Ms. Khan talks about the need to urgently address Nigeria's macroeconomic volatilities.
Now, we all know that there are certain macroeconomic conditions that foster the development of debt capital markets. Ideally, we would be seeing low inflation, low enough interest rates. Corporates look at this low level of interest rates and say, it's actually possible, despite the transaction costs involved, which are coming down over time, it's possible to issue into this market. Debt capital markets become that much more of a reality. Today, the situation that Nigeria faces is that the federal government dominates the issuance in debt capital markets. Interest rates are high, inflation is very significant. These are not conditions under which many new corporates are going to think ideal funding conditions. We can price ourselves quite favorably in these markets. And there is a need, therefore, for overall macroeconomic stabilization. But there are other elements that work as well, and this has to do with the availability of different pools of capital. Now, Nigeria has, to its advantage, one of the youngest populations globally. It has growing assets within its pension system. These are incredibly important, very crucial building blocks for the longer-term strength of its debt capital markets. But we also know that when it comes to being able to tap into those very substantial pools of foreign capital, foreign investors have been here some years and not been here in other years. At times of low oil prices or low oil earnings for reasons related to production, the risks in Nigeria can sometimes seem insurmountable. Take the recent past, great concern about foreign currency liquidity, the availability of it, the ability to hedge foreign exchange risk, the welcoming nature of the local market to foreign investor participation. When these things, when these very crucial elements have a question mark put next to them, it doesn't serve the purpose of longer-term debt capital market development. So yes, Nigeria has come a long way. There is a good regulatory structure in place. The FMDQ has been doing excellent work in terms of lowering those transaction costs over time, putting in place the enablers, the building blocks for longer-term capital market development. But what is also needed is some element of reassurance on the broad macro. Is there joined-up thinking amongst all policymakers on the necessity of bringing about low inflation and therefore lower and more stable funding conditions, lower interest rates? No country can force-fit lower interest rates by saying, we just want interest rates to come down. It takes fiscal policy to work hard at it, monetary policy to work hard at it, for very many years until that credibility, that hard-earned credibility, is easily won. And so there is still work to do, but what is important for Nigeria is now, at a relatively favorable time, when oil prices are improving gradually, when oil output seems to have stabilized, with the economy emerging from recession, now is the time to think of the reassurances that can be given, the risk mitigants that can be put in place, the product development that needs to happen to ensure that when Nigeria faces a severe macroeconomic crisis again, the impact is not going to be as severe as what we had seen in the recent past.
What's your assessment of the debt capital market in Nigeria at the moment, vis-a-vis the concerns of investors around transparency and the need for disclosure?
Well, the regulatory aspect is key because it isn't just the strength of the regulations that are in place, but the way those regulations are enforced with consistency in a way that aids that transparency, where there is a culture of openness, proper disclosure and transparency that will aid the development of capital markets longer term. Now, FMDQ has already played a very pivotal role in terms of fine-tuning the system and moving things in the right direction. But over time, it's only going to be the increased depth in that market, more issuance, more corporates feeling comfortable with the disclosure requirements that are in place and feeling, well, this is something that we can do. We can self-certify. We can issue debt as a sign that we're willing to do all of this. And when that continues and when that grows in scale, you will get that culture of openness and transparency that will foster the development of this market.
2.5 trillion naira said to be available in pension funds for investment. But madam, what kind of products, instruments do we need to start creating enough to attract all of these pension funds?
Now, there are a number of elements to this. For a long time, you'll be aware of the thinking in Nigeria that because of the mandates given to the pension funds, this was much more suited to an environment of equity capital market development, that debt capital markets were almost seen as something of an add-on, something that came later, and thankfully that thinking has changed. But some very key issues were raised in that panel just now, a key one being the need to be able to invest in debt that is investment grade listed or higher. Now, there will always be, in an economy like Nigeria, a varied degree of funding requirements from those entities, the large blue chip entities that might say, this is attractive, let's issue debt, let's not rely just on bank capital. But what about some of those entities that might be starting up without the established track record, without necessarily the investment grade rating just yet? How are their funding needs likely to be taken care of? And is there more that regulation can do? Is there more in the way of product development and mitigants that could be put in place to raise things to the level where pension funds are able to participate much more actively in those markets, which in itself will encourage more issuance from those entities with the funding needs? Ultimately, we should not forget that the purpose of debt capital markets, it's not just a nice to have. So here's a blue chip corporate able to issue vast amounts of debt, and there's a ready, willing investor base. The ultimate aim of the debt capital market is to be there to facilitate the funding requirements of all segments of the market. And this is something that Nigeria should be aspiring towards and moving towards.
And shareholders of Ecobank Transnational Incorporated have approved transaction advisors for the proposed convertible bond issue of up to $400 million. In a notice to the Nigerian Stock Exchange, the lender explains that the transaction is expected to be completed before end of 2017. The convertible bond will be listed on the international securities market of the London Stock Exchange by end of 2017. Meanwhile, Fidelity Bank has announced its intention to launch a $500 million senior unsecured medium-term debit notes. The bank also intends to tender an offer to purchase its outstanding $300 million notes due on May the 9th, 2018. Fidelity Bank confirms in a statement to the Nigerian Stock Exchange that the bank intends to list the notes on the Irish Stock Exchange with expectation that the notes will be traded on its regulated market. And that's it on the program for the week and, of course, for the quarter. Thank you very much for being part of it. I'm Chimezie Obi. You're welcome.